Good morning, student. In this video, I will discuss case B relating to the topic revaluation of assets and reassessment of liabilities. In the last video, I have discussed when revised value of assets and liabilities are to be shown in the books of account. Then we have already learned how to prepare revaluation account, what is the rule to prepare revaluation account. As in the debit side we showed in decreases in the value of assets, increases in the value of liabilities and unrecorded liability. In the credit side we shows increases in the value of assets, decreases in the value of liabilities and unrecorded assets, and profits were distributed among the partners in their old profit sharing ratio. And now we will discuss the case B when revised value of assets and liabilities are not to be shown. In this case, we will find out the net effect of revaluation. And what is the rule to find out the net amount? That we will add all the credit items. What are the credit items? That if in the question there is a increases in the assets and decreases in the liability and unrecorded assets are there, then all the items will be added, and from that debit side of the revaluation account, that is decreases in the assets, increases in the liability and unrecorded liability will be deducted, and the net effect, the net amount that you will get, that will be uh, adjusted by passing an entry. Gaining partner will compensate the sacrificing partner according to the gaining or sacrificing ratio. It means that there are three steps are to be followed while passing the entry relating to case B. First, you have to calculate the net effect of revaluation, means add all credit items, deduct all debit items, then you will get the net amount. And in the second step, you just calculate the sacrificing and gaining ratio, and gaining partner will be debited and sacrificing partner will be credited as per the proportionate amount. So this is what the rule we will discuss in detail. Let's I am reading what the things is mentioned here. This is the case, as I already mentioned, revised value of assets and liabilities are not to be recorded. Means the partner decided not to show the effect of changes in the value of assets and the liabilities. Then what are the procedure? You just go through it. Gain or loss on revaluation of assets and reassessment of liability is adjusted through partners capital account by passing an adjustment entry, as we have already discussed in case of goodwill, in case of reserves, while debiting the gaining partner and crediting the sacrificing partner, and depending upon when current account will involve, when capital will account will involve, it depends upon the whether fixed capital is given. And what are the steps? That first, see here, increases in the value of assets. If suppose there are two assets increased by certain value, suppose furniture increased by 5,000 and machinery increased by 10,000, so 15,000. Then if there is a decreases in the amount of liability, you just add it, and decreases in the value of asset, as I already mentioned, deducted, and increases in the liability will also be deducted, and then you will reach to the amount of net effect of revaluation. See here that brackets refers to deduction, and without bracket, that is add. And now the second step, as we have already familiar with this second step, you just calculate the gaining or sacrificing ratio and then you pass the entry. So let us try to understand the same thing with example. See here, one question is there. A, B, and C are partners. Their profit sharing ratio is 5 is to 3 is to 2, and they decided to share the future profit in the ratio of 2 is to 3 is to 5 with effect from 1st April 2020. They also decide to record the effect of following revaluation without affecting the book value of assets and liabilities by passing an adjustment into it. It is quite clear that which case will be followed in this question. You have to pass the adjustment entry. See, book value and revised values are given. Land and building 5 lakhs, revised value 5 lakh 50,000, then it is increased by 50,000. Plant and machinery 2 lakh 50,000, revised value is 2 lakh 40,000, then it is decreased by 10,000. Creditor 60,000, revised value 55,000, liability decreases by 5,000. Outstanding expenses, that is also a liability, 60,000, and revised value is 75,000, that it is increased by 15,000. As you know the rule well, increases in assets and decreases in liability will be added, and decreases in assets and increases in liability will be deducted. So let's see, it is solved here. The changes in the value is taken, 50,000, 5,000 is added, and 10,000 and 50,000 is deducted. Then the net gain, that is profit, it is coming 30,000, and this 30,000, and in the second step while calculating the gaining and sacrificing ratio, A is sacrificing and C is gaining. B, there is no change in his ratio. Then what next we will do, next is you just you already completed your two steps. First you have calculated the net amount, that is our 30,000, and proportion it is coming 3/10 A is sacrificing and 3/10 B C is gaining. So now you just calculate the proportionate amount of 30,000, 3/10 of 30,000, that is 9,000. A will be credited by 9,000 and C will be debited because he is gaining to 3/10 of 30,000, 9,000, and this entry will be passed. C's capital account debit 9,000 and A's capital account credited by 9,000. So proportionate amount of gain or profit on revaluation adjusted through a single entry. It means in the new balance sheet there will no change in the value of assets and liabilities. So this is also one of the way, in case of change in profit sharing ratio without affecting the book value, you can do the adjustment. So this is what we have discussed about the topic when revised or changed value of assets and liabilities are not to be recorded. I think the concept is very clear. First, to calculate the net effect of revaluation, then in the second step calculate the sacrificing and gaining ratio, and in the third step you just calculate the proportionate account and then pass the adjustment entry. So this is all about this topic. Thank you so much. Take care.